Alrighty, folks, something that you clearly understand if you watch my daily financial news is I like to make predictions. I like to go out on a limb and be held accountable if I'm right or wrong. I just think it's fun. But I also, that means I hold my guests to the same bar, and we're going to have an over-under with Mr. Taylor from Life Goal Investments. How you doing, buddy?
Let's do this. This is fun. You've held me to this now for like the most crazy inflation period that we've seen since the 1970s. You and I are sitting around here like idiots being like, we can peg this exactly. Here's where it's going. And I'll say this, you started out really whooping my butt, and then it's been a little bit more mixed. And I'm not saying mixed mean I've done better over the past 3 or 4 months, but
No,
it
you
hasn't
have.
been
You've
just
clearly.
one-sided and you whooping me like you did last year.
Yeah, those first 4 or 5 months was an ass kicking. That wasn't
Yes,
even a
it
fair
was.
fight.
Yes, it was. And you know why you were on the, hey, this is going, and you had good reasons. Don't get me wrong. You were like, this is going higher, and I'm like, I don't think you can get away from this that quickly. And boy, did it ever.
Did it ever? Well, it's funny. I think we're about to get another shocking reading. So, folks, we're going to talk about CPI headline, just because that is the most often quoted, is what you will see in the news starting tomorrow at 5:31 a.m. It's reported at 5:30. Let's give the setup, and then,
to be clear, Pacific time. Because
yeah.
I'm like 8:30. It's 8:30 now. It's 8:30 my time. I'm on the East Coast. Yeah.
Yeah. So 5:30 Pacific or West Coast. So absolutely right. Thank you for that. So here's the setup. So 2 months ago, I think it was at 6. Then it had a big leg down to 5.
Correct.
Then the last meeting it went to 4.9. So I believe it is 10 months in a row of declining. This is headline, not core, because core didn't unfortunately keep that trend. So I'm going to ask you first, what do you think the headline reading comes out tomorrow? And then we'll do an over under. So again, 4.9 was the last reading. We obviously have a large base effect rolling off. We've had commodities come in. Any thoughts or just wild ass guesses what the print will be tomorrow?
Yeah, I think it's going to be right at about that kind of 4.2 number. I know expectations actually beneath that some.
Yeah.
Latest expectation I saw was about 4%.
Yeah, last I saw was 4.1, but yeah, so it's
okay.
So it's really interesting. So it's funny. I've been calling this for about a month because again, I understand the base effect and how that works. I'm like, we're going to have 4.3 or better. Now the market's calling for that. So, got that one. But yeah, I think
I know where you're going. Are you going? Are you doing it? Is this in the threes? Is this in the threes?
No, not quite. But I think,
okay.
I think I'll call 4.1.
Okay.
I'll put out 4.1.
Yep.
But yeah, it is not out of the realm that a 3.9 prints. If I were to 3.9, wow, the market would rip on 3.9.
And it's funny because there's such a psychological component of it just going from, I call the expectation 4.1, which is what you said. I saw 4. So you're barely off with either
it's a rounding number. Yeah.
But it is the fact that it is that psychological number. Like the market hits resistant points of like 4,200 on the S&P and, whatever it is. Like those points are very, very important.
Yeah. Yeah, I just can't see a 3.9. I mean, but again, we have fallen a full 100 basis points before, or 1%, right? We did that just 2 months ago. So it's not crazy to think about. But I even think 4.1. This is why I think back to video number 1, we have Wall Street stepping in, buying the rumor. Then they're going to dump on the retail investors starting Tuesday morning at 6:30 a.m. When retail jumps in because they don't realize how this stuff works.
It's very possible. Yeah, retail could look at this and say, wow, inflation's really low and the market is already set up for that. And
it's like, we're already got you. We'll
let you bid this quick and then we'll sell on the other end. There's absolutely the possibility for that playing out, no doubt.
Yeah. But you know what's really wild? What's really wild is let's just say it's 4, just for easy math.
Sure.
There's a very good chance that the July print is low 3s. It could have a 2 on it because I don't know if you know this, but I thought this month we were rolling off the largest base effect. It's actually not this month. It's next month.
It's June. Yeah.
June. We roll off 1%. Exactly. We roll off 1%, but like 1.3 next time.
Yep. Yeah. Imagine that, man. All of a sudden you go from,
we're at 2.9 or something. I mean, we could legitimately be at 2.9% CPI headline inflation July 13th or whenever it is. It's wild to think about.
And it's funny because you go back to the Fed has been slaughtered on the word that they use, transitory. And so you look at it though and you go, okay, well, like how quickly were they expected to be able to bring inflation down after we had to stop the economy, pump money into it.
Yeah.
Like, is transitory a year and a half? Like, what were you expecting them to do that in 6 months, in 2 months, 3 months?
Yeah.
And maybe the fact that transitory was, hey, it's not just supply chains, and when supply chains ease, it's going to go back to normal. And that didn't happen. So if that was the thought of what transitory really was, then that's certainly the case. But if we can go from 9.1 in June of last year to your point, threes,
2.9. Yeah. Say
2.9, I mean,
2.9
2
by.
would be crazy. Yeah.
Ah. There's a good chance. I'm not calling that yet, but when you just look at the simple math equation, 2.9 is not crazy by July 13th or 14th,
Right.
whenever the next CPI print is.
Right. And my thing on the other side of this is this the Fed bringing rates up, pushing down? I mean, the supply side has been handled relatively well. And so now it's just starting to eat away at demand, really slowly driving down inflation. Like, is it possible that we can maintain that low level of inflation coming from where we were without actually having your true full on recession? And I
I don't
think
know.
that that's where the market has shifted their opinion from, hey, we're focused on inflation, and then they were focused on recession. And now I think they're back focused on inflation and the interest rate hikes or lack thereof that might come.
Yeah. So I got two more questions for you on this video. If I were to ask you, I think we asked you this, and we'll go from memory, the chances of a soft landing like 8 months ago.
Yep.
I'm guessing, I think I remember 8 months ago, we're like, yeah, it's possible, but not very likely, right? You know, it was probably in the single digits of likelihood. That's
I
where I
want to say
was.
that we said 10. I want to say that we
Yeah.
said 10 was kind of where we settled on. Yeah.
Yeah. So it was really low, right? 5 to 10%. I'm willing to admit that the chances are up of a soft landing today
No doubt.
versus 10 months ago. So 20% kind of feel. So it's double, still not
Yep.
base case, but more likely. Is that fair?
Yeah, far from base case though, right? I mean, the
Oh, yeah.
reality of that is
Yeah.
you flip a coin 10 times and you hit 10, you hit 8 heads. That's really, really, really frequent.
Yeah.
And that's kind of what we're saying here, is that it's the likelihood is extremely low. And
Yeah.
I still full-heartedly sit in that camp, but that is what the market's pricing right now. Full disclosure is they are pricing in the fact that there is going to be a soft landing. Otherwise, there is no way,
Yeah.
no how that you can justify the numbers that we have right now in the market.
Yeah, and I think a soft landing becomes more possible. Again, not base case, because I think we are experiencing something that most adults haven't seen in their adult life, and that's the rolling recession.
Yep.
Right. Going back even to the one that crushed me, the .com crash, it was very much kind of all of everything down, and then the Great Recession, and then the shutdown of the economy. I think this is certainly teasing out to be a rolling recession, right? We've had retailers in grocery be a problem, but travel is going bonkers, right? We had a depression in real estate, right? We went from 6.5 to 4 million, but all of these things, come around, right? We get rates going down. It's just, I think a rolling recession could really, again, not my base case, but we might see GDP never go negative. We might.
It'll be interesting if we could see that. I look at the commodities. I mean, commodities are telling a brutal. So listen, commodities, gold, and bonds are all telling a brutal, brutal, brutal story. The only one that doesn't believe that story is stocks. So here's a good point right out of FactSet, which is the best data compiler when it comes to earnings data. So if you look at Nvidia, Microsoft, Meta, and Google. So Nvidia, Microsoft, Meta, and Google, they are supposed to make up the lion's share of earnings growth over the next 3 years. The four of them are anticipated to average 36% annual growth rate over the next 3 years. 36% annual growth rate over the next 3 years.
So the rule of 72 means they're going to double. Yeah.
Exactly. Exactly. And so like that is the expectation that's getting priced into the market right now. And the reality is like, and the way that this works is also next quarter, the quarter we're currently in, when the second quarter of the year gets reported on, which isn't too far out at this point, is actually expected to gap downwards again. So it's not expected to be a good quarter from earnings perspective, but the third quarter is supposed to get better, and the fourth quarter is expected to be really good all of a sudden. And it's like, okay, where is that coming from? You know, what is alluding to that growth? And certainly Nvidia, you know, posted blowout numbers. No doubt about that.
Yeah. When you look at those four companies, I think Nvidia is the only one that has a shot at doubling. Again, I have no idea, but like Microsoft's long in the tooth, all these others, I'm like, they're going to grow. Don't get me wrong, but double?
Right.
I
Right.
don't
Meta, I
see
mean,
it.
the earnings growth for Meta were god awful in the first quarter. It was just the
Yeah.
fact that they took that, you know, that knife and cut off every bit of muscle that was along the way on the spend side. They literally cut themselves to the bone. And
Yeah.
so the
Yeah.
market was like, okay, great. Your
We
earnings are
like
really
that.
good.
Yeah.
Yeah, yeah. We like that profitability, the margins
Yeah.
that come along with that. But in
Yeah.
reality, the earnings wasn't there.
So we're going to close this out with Fed decision. I think I know where you're at, but we might as well talk about the rest of the year. So what do you think happens on Wednesday?
Yeah, no, I mean, right now the market is saying about a 70% chance of flat of them not moving higher.
Pause.
I said, yeah, pause exactly. So I said last month that I didn't think they need to hike. And so
Yeah.
I'm obviously going to sit in the camp that no, they're not going to hike here coming up.
Do you see what are the chances of a rate cut of any kind, even all the way through the end of the year in December? And what do you think?
So I've been in the camp that there's been one rate cut that will come later on this year. And the
Mhm.
way I foresee the economy playing out, because we're getting closer to the end of the year, it becomes less
Yeah.
likely. But I do think that the economy is more deterioration there than what the market perceives. And so
Yeah.
therefore I do leave one on the
Okay.
table, but it does become less likely as we get closer along the way. And they
Yeah.
still talk about potential rate hikes. So
Yeah.
yes. And and and
Yeah.
and, and so that, I'll ask you this too, and we can,
Mhm.
you know, sorry to expand this further, but
No, it's fine.
July right now is over a 50-50 chance of a rate hike coming. So this is a pause,
No
breather, and
chance.
then a rate hike coming.
No chance. That's it's all
Interesting.
theater. It's all nonsense.
Yep.
It's the Fed talking tough. And again, I think they should. I think that this has to be a hawkish pause. Frankly, every meeting the rest of the year has to be a hawkish pause because they can't be seen as weak. But it's all nonsense. They're
Yep.
not going higher.
But the interesting thing is they've been saying that all along, and the market's been saying, we don't believe you. Now the market's saying over a 50% chance that we do get a rate hike in July. So it's just an interesting thing. And especially to your point, if we do get this massive base of roll off effect and a
Yeah.
massive gap downwards in inflation, there's going to be no reason for them on the other side.
I tell you what, you text me tomorrow morning by close of business. So what are the odds today? 70% of a July rate increase?
So 70% is a pause for this meeting.
Okay.
It's like a 55% chance
All right. So
that we have higher rates in July.
I'm going to bet $1 with you right now about July. The market will be under 15% by close of business tomorrow because CPI is going to come in so low. Market's been wrong a lot. All these people chime in. The market's always right. The market had a 1% chance of a June rate hike like 2 weeks ago. I'm like, guys, it's not coming. What are you talking about? And sure enough,
oh, the market has been so wrong on this topic. So wrong on this topic. And I keep going on here. That's why I'm so surprised that we've gone from 3 rate cuts happening this year to 0, because that's now the expectation is that rates will be exactly where they are at the end of this year. And the market has continued to rip higher. It's like,
it's wild.
It's weird. Yeah. So we'll see.
That's amazing stuff. Well, Taylor, do me a favor. You put out a lot of great daily content trying to make investing fun. Occasionally we get a Taylor rant, which I will admit are my favorites. Where can people find you?
Yeah, find us at Life Goal Investments. We're on both Instagram and on TikTok at Life Goal Investments.
Thank you so much.
Appreciate you, Michael.